What's going on, guys? In this video, I want to talk about, what strategy is better for a trader who is maybe just starting off, or a trader who is finding some troubles getting funded with the prop firms or taking payouts, and what exactly is the difference between all these strategies. So I'm not going to get into specific strategies per se. What I'm going to talk about more so is a mechanical or a dynamic type strategy. Okay, so what is the difference? A mechanical type strategy or edge is going to be something that is very systematic. So you're going to look for something, an area of opportunity in the market, and when you enter that trade, you're going to have a very hard stop loss and you're going to have a very hard take profit. Okay, that's mechanical. So I'll give you guys an example. 15-minute opening range. Okay, so what we're going to do is we're going to take the 15-minute candle, right, to start the day. Where is it at? It's right here, 9:30 in the morning. Here's the first 15-minute candle. What I'm going to do is kind of highlight a little bit of a box here for that 15-minute opening range. The mechanical strategy would be that if we break highs or we break lows out of the 15-minute opening range, we are going to set a 10-point take profit and a 10-point stop loss, let's say. Okay, so price here at 10 a.m. breaks the 15-minute low and then runs down. You're going to get triggered for a 10-point take profit before the 10-point stop loss hits. That's very mechanical. It's systematic. Why do I think that more traders need a mechanical strategy than, let's say, a dynamic strategy? Is because it's easier. It's less headache, it's less thinking. I think that the less a trader thinks, the better a trader will do. Now, as you start to build experience and you build confidence and you start to build your accounts and your bankroll and your money that you're generating from trading the markets goes up and your time and experience level goes up, then I think you can start looking for other strategies where, stop losses are a little bit more dynamic. What would be an example of a dynamic type strategy? Well, we could still take the 15-minute opening range, but we can tell ourselves things like this. Okay, the initial 15-minute opening range is a range of 53.5 points, okay, from high to low. What I can tell myself is that if I take 2 or 3 contracts, okay, I can give myself the top of the range, which is 53.5 points, as a dynamic kind of floating stop. Okay, now if we break the bottom of the range, in this particular example we broke the bottom of the range, I can sell, maybe, let's say I'm trading 2 or 3 contracts, I can sell one contract at, let's say, half ATR, which is half of 50 points is going to be around 25 points. So if this trade goes down, right, if this trade goes down around 25 points from entry, we're going to take one contract off the board. What we're then going to do is maybe cut our stop loss in half from the full 53 points down to maybe, let's say, 25 points. And every candle that puts in a new low, that closes in on a new low, we then kind of move our stop loss to the previous candle high until we get stopped out. That's a dynamic trading strategy because you don't have a hard area for taking profits. You have an idea of where you want the market to go. I notice a lot of range traders, let's say we're looking at this range as a whole. If I kind of zoom out a little bit, if I just look at this 15-minute chart, notice how we're in this top range here from overnight session, and we never, once we breached it to the high side in the first 15-minute opening range candle, we never confirmed it going higher. What you can tell yourself is, this is more of a dynamic strategy, is, as long as we stay pinned below that 15-minute opening range, we want to hold this trade and try to maximize as many R's as we can. And when I say R's, that's returns on your risk. So again, I don't think that way of trading is the best for newer traders or traders who are not able to take payouts on a month-by-month basis, because there's a lot of variables that go into it. Sometimes, as you tighten up that stop loss, maybe move it half ATR or half range or to break even, you get tagged. And then that creates an emotional trigger where you jump back into the move and then you get trapped and then you get stopped out again. I think it creates a lot of emotions. I also have seen traders be in profit 20, 30, 40 points and then not realize gains and allow it to chop, consolidate, bounce, and then they're sitting there like a deer in the headlights, and they're hoping, waiting, praying that it goes back down 40 points, 50 points, or whatever it was that they were already profitable that they did not realize. Also, sometimes you get into a move and it never really hits a take profit that you had, an area of interest that you were looking to take profits, and it kind of just starts chopping and going the other way and forces you to take a much bigger loss than you should, because you're kind of using that dynamic range to play as a stop loss, which in this particular case would be any type of close, after entry. Once we broke down through that 15-minute opening range, any type of close back up into this upper range, or if we get above it, it tends to put traders on stilts, right? And that's what you don't want to be. You don't want to be walking around on stilts. So I think that until you start building up an account, until you start taking some payouts, until you start passing evaluations pretty much at ease, and start to get into these funded accounts, and you take a few payouts from the funded accounts to like kind of recuperate your tuition cost, and maybe go back into the positive on what your investments have been. And even if you're trading a personal account, right? Even if you have a $10, $20, $30,000 personal account and maybe you've lost $5,000, $10,000, I would stick more to a mechanical strategy. So again, a strategy could be anything. I'm just using a 15-minute opening range as an example. You can use different moving averages to build a strategy. You can use different areas of supply and demand from a macro view, maybe take some levels from a 4-hour chart and kind of mark them out on your charts. You can play things such as overnight highs and overnight lows and play the range in between, and kind of scalp that back and forth. But I definitely, recommend mechanical over dynamic in the start, until you become profitable, until you become consistent, until you have your own rules, and until you stop watching videos like this, okay? Because if you've landed on this video for whatever reason it may be, you are obviously interested in trading content or strategy content or risk management content or prop firm content, because YouTube algorithm is throwing you guys these type of videos. So unless you stop watching these type of videos because you don't really need to, and again, I would hope that one day all of you guys here don't need to tune into my channel and look at the newest strategy, or look at how I'm trading, or look at what's working for me, or look at what's working for the next guy, because that still tells me that you're still searching. And when you're still in that searching phase, that discovery phase, you tend to make a lot of mistakes still, and you tend to have a lot of questions, and you tend to like kind of worry about a lot of things in your trading because you haven't had enough experience yet. So my best recommendation is dive into the markets, get that experience level up, take the trades, document, journal, have hard risk settings in place, personal daily loss limits, always have a stop loss, do the basic things like that. Take your time, treat every day as a brand new day. No two trades ever correlate with each other, even though it's the same strategy or edge. Every trade is separate and individual of itself, but have a mechanical strategy, right? Start off by looking for something in the markets and telling yourself, how much do you want to risk and what are you looking to make on the trade, and make it realistic. So for example, myself, years ago when I started trading futures and for prop firms, I didn't want to risk any more than $100 per trade. So I was kind of trading maybe two or three micros, and then I was looking for, like, let's say $50, right? If I can make $40 or $50 on this trade, that's great for me. If I lose $100, fine, I'll stop or whatever. I'll maybe look for one more trade. And that kept things simple because it just kept me focused on whatever I was looking at. So if this is the particular strategy, let's just say a 15-minute opening range, well, every day you're going to get an opportunity to trade the 15-minute opening range. So even if you only take that one trade each and every single day, having that mechanical stop loss of, hey, if it hits 10 points or 15 points, take profit, or 5 points, take profit, I'm out of the trade. If it goes against me 15 points, I'm out of the trade. I don't have to think. I don't have to worry about overhead supply. I don't have to worry about where it could be going. It's either going to work or it's not. I think in the beginning it's better for building that consistency up. So again, I hope you guys enjoy this video. If you guys need Apex accounts right now, I know there's no sale, but if you have blown up accounts in your dashboard, you can reset them for the same price as the 80% off sale. So any size account, 25, 50, 150, 200, 300, whatever the account size is, right now it's only $35 to reset those accounts. Definitely go through, because we don't know, right? They're making a lot of changes, I think, for the better in terms of payouts, dishing away with the pay period, only 8 days now. They're doing a lot of changes. They might not want to run another sale and just keep it at the resets right now until they can kind of get caught up on things. But if you have blown accounts, definitely go and reset those accounts so you can practice your edge and practice your strategy. I always recommend having a little skin in the game when you're testing. I hate paper trading, even though technically trading an evaluation account is paper trading, but at least there's an incentive if we do good things. That incentive is getting into a funded account, which can potentially lead to real money, versus just trading a demo account or a paper account on the side or a practice account. There's no incentive there. So I want to have skin in the game. Go out, reset your accounts, 35 bucks. I'll see all of you guys on the inside. I'll see the rest of you guys on YouTube. And again, good luck trading, and just keep sticking to it, guys.